Hey everyone, my name's Andy. My channel's Finding Value. And if you guys are looking for undervalued investment opportunities, click subscribe to the channel, become part of our community, ride this commodity bull market up with me and everyone else in the community. I've been looking through the comment section. I created this presentation. We got some people, they're still have questions. And I've got in this presentation, I call it crash or not. And I'm going to go over some of the worries that they have. And I'm going to show you some charts. So here's the difference between me and a lot of other people. A lot of other people listen to stories. They listen to narrative. They listen to data, and then they incorrectly draw conclusions from the data. So someone may think unemployment's high. How the heck is house prices going to go higher? Unemployment's through the roof. There's so many people unemployed. And you know what I do? I don't worry. Unemployment's not a metric for house prices to go higher, is it? It's not a metric. What I look at is inventory. I look at days on the market. I look at house prices. House prices going up, days on the market going down, inventory going down. Who's right? The person who looks at the data. You go with the trend. The market gives you the data. You can't make up a story in your head and then try to make a prediction. That you don't want to be doing that. You're going to trade what's in front of you. And you want to invest what's in front of you and what the data's telling you. You got to become a robot somewhat. And the moratoria ending, the forbearance ending, we don't know what the impact is. We don't know how that's going to affect inventory. We don't know how many homes are going to come on. You're taking a bunch of unknowns and then throwing it in the mix and pretending like this is going to have some sort of effect. We don't know what those effects are. We need to look at the data. We need to see how the inventory changes if that were to end. So I'm going to go into this presentation. I've got crash or not. And again, I don't have all the answers. I'm telling you and showing you one viewpoint, which is my viewpoint, and the way that I would look at the data and how I interpret it. Other people can interpret it differently. Maybe your viewpoint's right. Maybe mine's wrong. But I'm gonna give you those two viewpoints and battle them back and forth. So let's take a look. Let's see what I've got. So it's a crash or not presentation. And what I'm going to say is what you look at matters. So this is what a lot of people are looking at, and they're drawing their conclusions from this data. Unemployment, super high. People are losing jobs. We've got the moratoria, forbearance that could be ending on real estate. We had the COVID crash that caused a lot of supply chain problems, and it caused a whole bunch of different problems. Commercial real estate, how's that doing? We're not making as many loans because how could people be making loans if we have high unemployment, people are losing their jobs, a whole bunch of homes are going to come on the market, we've got the COVID crash, and commercial real estate, what about that? All those things are bad, right? Now, this is how I view the world. I'm going to look at it completely different. I don't look at all of that data. And you know why? You know why I don't look at this data right here? Everyone in the market knows all this. We already know this. So how do I know what the market thinks? I don't care what story that people put on YouTube. I don't care what story people make up in their heads. What does the data say in the charts? What does the technical analysis, what are they loading up on? Where's the volume loading up? Where are people buying these things? What chart patterns are we breaking? What chart patterns are we not breaking? We should, if this was that bad, we should see bonds going through the roof. We should see interest rates going down. We should see the dollar going higher. We should see people running to safety. And what do we see? The exact opposite. We see the exact opposite of that. Of all of those stories that people are putting in their head. Can you be a successful investor based off of stories? I don't think so. I don't think you can become a great investor by being worried about a bunch of different things. What you have to do is you have to cut this thing dry. You gotta take the stories, the narrative, the news out of your head, and you got to start looking at things that are neutral in terms of, do we need to go left or right here? How do we make that decision? How do we know we need to go left here, or how do we know we need to get right? What are people in the market saying? How are they voting with their dollars into the market? Are they buying it or are they selling it? Those are the things that I look at. I don't look at that. I mean, I do, but I don't. Because that doesn't mean anything. Unemployment's high. Okay. How are money flows going into the stock that you own? I don't know. People are losing their jobs. Are they potential home buyers? I don't know. Are these people going to buy homes that are losing their jobs? Maybe those people who lost their jobs and people aren't hiring them back because they can't, because they get more money by not having a job because of weekly unemployment. I don't know all of the answers here. Remember that. The forbearance, how many homes are coming online? Does anybody know that? No one knows. Oh, so what effects is it going to have on real estate? Nobody knows. Well, why don't we look at real estate to see if it's going higher and look at inventory? Oh, inventory is at all-time lows and real estate prices are going higher. Well, that's the data. The trend is up. Moratoria is not impacting it, at least not at the moment. Commercial real estate. I haven't looked totally deep into commercial real estate because commercial real estate makes up this much of the commercial banks loaning. It doesn't make a big impact. Residential real estate's over 50%. What's commercial? 10%? 5%? It's not, I don't know what the exact amount is, probably higher than that, but it's not the majority. I'm looking at the big majority numbers. Let's look at the charts. This is what I see. This is how I view the world. Right here. Here's gold. Expansion phase of real estate is between the red lines. Expansion phase of real estate was here, and then it runs a couple years after. Expansion phase of real estate's here, runs a couple years after. An expansion phase of real estate just started, and we're about to break out of this big cup and handle pattern. Well, gold disagrees with you, crash guys, because it's going higher. It's got a cup and handle pattern, and we're entering an expansion phase of real estate. Every single expansion phase of real estate, gold's gone higher. Every single one. And guess what? It's setting up to launch higher. Well, why is that? Because we have inflation. So the market thinks that gold's going to go higher. All the people buying gold, they're all wrong, right? Silver. Silver's putting in a monster pattern. See that red line up there? That's the price projection. It goes off the chart. I don't even know how high that is in terms of price. It's off the chart. $300, whatever it is. Now, would silver be forming this pattern if we were having problems? No, it wouldn't be. All the people in the silver market must be wrong, right? So the gold market's wrong, the silver market's wrong. And what do you think the chances of that breaking to the upside? I would say I would give it a 95% chance. Why would I say a 95% chance? Well, gold's breaking to the upside. It broke out of the upper side of its handle, and it's ready to break the top of that cup. Platinum already broke out. These guys flocked together, guys. It broke to the upside. That's platinum's minimum price projection. I don't know, 2,500 or something. If I were to do a price projection on it. So platinum broke to the upside. Everyone in the platinum market would have to be wrong. Who's buying platinum? What about the CRB index? Oh, that's breaking to the upside. What would the projection be? It's this height right here. Projected up, I don't know, 400, at least 400. At least. Another double. And we broke to the upside. So I guess the whole commodity market has to be wrong too. I mean, we're really starting to stack this up. The bond market's wrong because they're selling bonds and bonds have gone down. The commodity market's wrong. The gold market's wrong. The silver market's wrong. The platinum market's wrong. Now, what about the copper to gold ratio? We'll look at Dr. Copper. Dr. Copper, of this gigantic pattern, broke to the upside of its ratio. This is the copper to gold ratio. It broke to the upside and it's right up here. The projection of this is all the way up here. That's what this height is here. So you projected the breakout, and there it's about right here. I guess the copper to gold ratio is wrong. Now, this stuff can go up and down in the short term. What I'm saying is the overall general trend is going to make this move happen over time. Does not mean it's not just going to go, oh yeah, we're going to go straight there. It's not going to do that. It's going to take some time. This thing came down and it bounced back and forth quite a bit. And then you came sideways for a long time. And then we broke out of this pattern to the upside, and it's ready to go. It's game on. So then the copper to gold ratio has to be wrong. The people in the copper market, yeah, they got to be wrong too. If this crash is coming. Then we've got the XAU to gold ratio. And I threw this up here just because the chart looks beautiful. We broke this downtrend pattern. We've got the outperformance of the mining sector. It's coming. And we're right there trying to break out of this pattern. It's beautiful to me. I just had to show this, even though it's not necessarily related to the argument of crash or not, but that's an opportunity right there. Gold and silver mining companies are going to outperform gold. That's for sure. Now here's the euro to dollar ratio. The euro to dollar ratio, last commodity bull market in the 2000s, went and the euro outperformed the dollar. Then during the 2008 crash, the dollar was stronger than the euro, and that created this pattern in here of this disinflationary period. And then again, in 2020, we went in an expansion phase of real estate. This was an expansion phase of real estate here. The dollar is going higher, the euro is outperforming the dollar. This broke to the upside of this pattern. What are the chances of this being wrong too? I can pull many charts up here, many, that I use as indications for a commodity bull market to come. If a crash was coming, and if the market thought a crash was coming, that's the big portion. It's not me. I'm out of this. I'm just the technician doing this. I'm the analyst looking at the data saying, guys, this is what I see. If the market thought we were going to have a crash, you would see bonds going up, interest rates going down. You'd see copper going down. You'd see some of these chart patterns breaking these big patterns to the downside, not the upside. Now, these are big patterns. These are all, I just showed you a whole bunch, all breaking to the side of a commodity boom and a dollar weakness. I've got the euro to dollar ratio right here. Now, remember, these things don't go straight up and down. They bounce around. So even if this thing goes down for next month, and it very well could. Our investments could go down for the next month, or 2 or 3. We would still be above these trend line patterns. We would still be game on. We'd probably still be in an expansion phase 2, 3, 4, 5 months from now. So I don't see the crash. I don't see it in the charts. I don't think the market is telling us anywhere that a big blowout crash is coming. Real estate's positioned extremely well for a move higher and more inflation, not a move lower. Now, I can't worry about every single little problem in the world. And I don't think you guys should either. I don't think you should worry about the moratoria ending. If it ends, we should see inventory go up. It's going to take a while. This isn't going to happen overnight. We don't know how many homes are coming on. We don't know when they come on. Maybe the moratoria ending is a good thing. Maybe renters will start paying their rent and the velocity kicks up. Maybe. I don't know. I don't have the answer. But from what I see in all these charts, is a crash is not coming. Could I be wrong? I very well could be wrong. I don't have the exact crystal ball, but I don't see any evidence of the crash. At least not yet, if there's going to be one. And I'm not going to worry about something that I don't see yet. You can't invest out of fear. The fear is going to eat you guys up. So when I look at things, I'm optimistic. I'm an optimistic person. I'm not a pessimistic. You could say I'm a realist because all these charts are saying, buy now, get in and ride it higher. Now, when I see when I see interest rates drop, if I see inventory go way up, and if I see copper to gold ratio move in an unfavorable way, then I'll worry. We have those signals. They're not signaling that. They're signaling the exact opposite. They're saying it is game on. So I wanted to go through these charts. I wanted to hit this up. I know you guys are, a lot of people get worried. They worry about a lot of things. Now, another thing I want to keep in everyone's get out in front of you is I can find value. I'm showing you guys lots of things: uranium, silver, platinum, copper. We're going through oil, all these different assets. I don't go all in on one asset. I don't go all in on commodities even. I have a very large portfolio of physical metals. I have a big portfolio of commodities. I do have a lot of commodities right now. I'm overweight commodities, but I also have other investments. I've got healthcare. I'm getting into renewable energy. I'm expanding it out open. Okay. I don't have everything and all my eggs in one basket. You probably shouldn't have all your eggs in one basket either. So if you guys, even though I might be talking about great opportunities, we're talking about upsides, my opinion is I don't put all my eggs in one basket. I'd never do that. I've got multiple strategies I'm employing here. I'm doing ratio analysis on physical metals. I do the ratio analysis is on everything, but I'm swapping physical metals back and forth to increase my physical holdings of physical metals. I'm looking at undervalued assets and investing in undervalued assets. And then sometimes I look at where's the money going to come from in the future and where is it flowing. There's other things that I think might be going on in the background that America might be trying to do that isn't what we'll call it a green future. I think there's another ulterior motive behind that. And I'll share that in another video. But that's what I'm looking for. I got to get the data from the markets. And if the data doesn't have it in the markets, I'm not convinced. I'm sorry. I won't listen to Robert Schiller. I won't listen to these PhD guys. Not going to listen to them until I see it in the market, until I see it in the charts, until I see these things start to play out. I can have it in the back of my mind saying, this is what I should look for. And then I'll start looking for it. But that's all it's going to do. I got to see the charts. I got to see it move. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.